Financially raw, real, authentic wisdom with Lawrence Oberholzer from Retire Rich and Happy.
The first thing that people need to understand is what is the difference between a medical aid and a hospital plan? Because I get a lot of people that say, oh, I don't want a full medical aid, I just want a hospital plan. But they don't really understand the difference between a medical aid and a hospital plan. It's not the same thing. So a hospital plan, or let's first look at the medical aid. A medical aid is legislated by the Medical Schemes Act, which is a different set of legislation than hospital plans get legislated under, which limits some of the things that medical aids are allowed to do. And we'll talk a little bit about that as I go through. Hospital plans are legislated by the Short-Term Insurance Act, which is a different set of legislation, so their rules are a little bit different. So typically what happens is your old type of hospital plans that only pay you for going into hospital, those things aren't really in the marketplace anymore. The hospital plans that you get these days are more things that pay per day in hospital. So they will say, we will pay you 2,000 Rand per day after the third day of hospital stay. And typically they don't pay the provider. They pay you as the client. They will then also, there's certain hospital plans that pay per condition or per event that happens, and it's a specific amount that gets paid. So usually with hospital plans, they are not 100% cover for medical expenses. With the medical aid pays for the provider. So it will pay the hospital directly, and it usually pays the whole hospital bill. It doesn't matter what happens in the hospital up to certain levels. So your medical schemes rate or medical schemes rate to 200% or 150% of medical scheme rate. But inside your medical aid is a major medical expenses portion, and I'll talk about that a little bit later in the show to explain exactly where that fits in. But that major medical expenses portion is basically your hospital plan built into your medical aid. So when you talk about I want a hospital plan, you still need a medical aid. It's just you only want to focus on the hospitalization or the major medical expenses portion of the medical aid. And like I said, I'll talk a little bit about that as we go along. So why did medical aids become so expensive? I remember when I was a child, my parents paid for medical aid, and you could go to the doctor, you just went and they paid. You went to the dentist, they paid. So you had these sub limits, but everything else was paid. And so then suddenly around 2000, just before 2000, 1999, 2000, the whole landscape changed with medical aids. You started to get the savings plans, and the whole way medical aids was managed changed, and it became very expensive. Medical aids suddenly became, overnight, it became very expensive, and it just continued that trend. So why did that happen? So here is what happened. At that stage, the Medical Schemes Act, the legislation changed because government decided that they want more people to have access to medical aid, to private hospitalization or private medical care, and therefore they want more people to be able to get onto medical aid. They then decided that the reason people aren't on medical aid is because medical aids get underwritten, and some people that have pre-existing conditions or that are older or things like that are being deprived of having the opportunity to get onto a medical aid. And the solution to that problem was to limit a medical aid's ability to underwrite their risk. Now, this is the big thing with all insurance. Insurance companies are successful only if they are accurate in underwriting their risk, because they need to make sure that the pooled risk benefit that they have is sustainable for the people that they insure. So let's say, for example, you get in 100 million rands worth of premiums a year, but you have to pay out 150 million rands worth of claims. How long do you think the medical aid is going to be solvent and sustainable? So they have to make sure by underwriting that the risk that they carry is sustainable, so that if they get 100 million rands worth of premiums, they only pay out 50 million rands worth of claims. Otherwise, it's not a sustainable model. The government then decided, well, we're going to take away the medical aid's ability to underwrite their risk. And we're only going to give them 3 things they can do to minimize their risk. The first one is they are allowed to put on a 3-month general waiting period on the medical aid. What that means is you start paying for your medical aid. For the first 3 months, you pay your premiums, but you cannot claim from your medical aid. So you basically have a 90-day waiting period where you are not covered, although you are already paying. In that way, they're trying to mitigate the risk, saying that the medical aid then basically gets those premiums to cover their risk in their risk pool. The second one is a 12-month condition-specific exclusion. So let's say you need a heart transplant and you don't have a medical aid. You can then go to a medical aid, join the medical aid. For 12 months, they will exclude that specific condition. But in month 13, the medical aid has to pay for that heart transplant, even if it's going to cost them R1 million. So they can exclude something for 12 months, but they have to accept you. And the third one is they can put on a late joiner penalty for people who haven't been contributing to the risk pool for a period of time. So how that works is if you are older than 35 and you haven't been on a medical aid for more than 90 days, they then have a look at your history and say, how many years have you been without medical aid after the age of 30? According to those years, they then add a penalty on top of your medical aid premium of either 10%, 20%, 50%, depending on how long you haven't been for a medical aid, to sort of penalize you because you haven't been contributing to the risk pool of medical aids. And that's the only thing that medical aids can do, which very much limits their ability to manage their risk. Because here's the practical situation. You can, like I said, the situation with the heart transplant. You know you have to have a heart transplant. You go onto a medical aid. For 12 months, you're going to pay premiums. They can't even charge you a higher premium than they would somebody else that is healthy. You pay your premiums, let's say that is 1,500 Rand a month. So you've paid 18,000 Rand into the medical aid. And they know they can only collect 18,000 Rand, but they're going to have a 1 million Rand expense with only collecting 18,000 Rand. And they are not allowed to decline you. This is also something that people don't understand. They don't understand that medical aids are not allowed to decline anybody. Doesn't matter what your history is or your age is. They have to accept you. The only thing they can do is those 3 things: 3-month general waiting period, 12-month condition specific exclusion, or a late joiner penalty. Saying that, what is the effect of that? The effect of that is that medical aids had to increase their premiums to make sure that they still collect more premiums than they're paying out in claims. Because they now can't manage their risk and decline people with a higher risk, the book becomes more risky, which means they have to increase their premiums, and that created exactly the opposite situation of what the government actually wanted, which is typical. So what happened is less people can afford medical aid than they could when they were just paying everything and they could actually manage their risk. So they had exactly the opposite outcome of what they actually wanted. But this is what we are sitting with. Now they want to create a national health insurance, which I'm not going to go into today. That's a whole show on its own, which is going on a complete disaster, the national health insurance. So that is basically the medical aid. So guys, if you are not on a medical aid, anybody that tells you you won't qualify for a medical aid or they won't accept you is talking nonsense. The medical aid is must accept you. That's the difference between a hospital plan, which is legislated by the Short-Term Insurance Act, and that they can underwrite the insurance. They can decline you. They can put a loading onto your premium at any point. They can exclude any condition for any period of time as far as they want to. So therefore, your hospital plans are usually cheaper, but there's much more exclusions, etc., on there. Let's start talking about the breakdown of the medical aid. Now, the first thing of a medical aid that you need to understand is, and this is the core of the whole medical aid, this is the heartbeat of the medical aid, and that is the major medical expenses. The major medical expenses cover is the portion that covers you for in-hospital expenses. That is, you get into an accident, you have to go to a hospital, you have to have an operation. All of those things are covered through the major medical expenses portion of your medical aid. This portion is run through a pooled risk model. What does a pooled risk model mean? It means that everybody's contributions, all these millions of people that are contributing to that specific medical aid, all those contributions goes into one big pool or one big bucket, and then they pay all the people's claims out of that bucket. So you might this year contribute 20,000 Rand into that pool and have no hospitalization, so you're paying for somebody else to be able to be hospitalized, because somebody else might pay 20,000 but have 100,000 Rands worth of expenses this month. So that pooled risk is then managed and everybody claims from the pool. People don't like it when I say it, but medical aids, as with insurance at any point, is basically a pyramid scheme. Is everybody contributes, and the few people that need to benefit from it benefit, the rest of the people just pay for it. But it is what it is. It is the structure that we need to make sure that we have that security. In your major medical expenses, you could get a medical aid with public hospitalization cover, which no one goes for because we know what the public health system in South Africa looks like. And then you have private hospital cover. So obviously you don't want to go for a medical aid that gives you public hospital cover. You want private hospital cover. But once you have the private hospital cover medical aid, different plans give you different rates of cover. So with a medical aid, 100% cover doesn't really mean 100% cover. So I see a lot of ads on social media, people saying, get cheap medical aid, 100% covered. 100% doesn't mean 100%. It means 100% of the medical aid rates. So that every medical aid has their own rate book of what they are willing to pay for specific conditions. So it is 100% of that medical aid rates. So 100% cover in medical aid terms doesn't really mean 100% cover. So you can then choose with your medical aid whether you want a plan with 100% cover, a plan with 150% cover, or a plan with 200% cover. There are still some with 300% cover. Why do you need more cover than the medical aid rate? It's not necessarily for the hospital. It is for the specialists, the surgeons, the anaesthetists, because they can charge up to 500% and more than the medical aid rate for their services. So if the medical aid rate of medical aid only pays 100% of the anaesthetist, which is say 3,000 Rand for the condition that you went in for, or the procedure that you had to go for, the anaesthetist can maybe charge 9,000 Rand, and the difference will be for your account. So that is important to understand. Just another thing on that, if you are booked in for an operation and you go in, you are allowed up front to first find out what the cost is for the anaesthetist. You are allowed to ask them for a quote. And if they are not within reason, you are allowed to ask for a different anaesthetist, for example. I see so many people, they don't even ask questions. They just go in, the anaesthetist pitches up, says sign here, they just sign, and then 2 months later or a month later, they get a bill for 15,000 Rand, and then they don't know why it was so expensive, and then they blame the medical aid. They say, yeah, I've got a crappy medical aid because they haven't even paid for the anaesthetist. You must also take some responsibility. So ask the questions. There's nothing wrong in telling the anaesthetist, tell me what you're going to charge me before you actually go in for the operation. Okay, so you then have that different rates, and obviously if you have a medical aid plan with 150% instead of 100%, it's going to be more expensive on a monthly basis. The next thing you can choose on your major medical expenses is whether you want to be linked to a network of hospitals or whether you want to be able to go to any private hospital. So how does that work? So most of the medical aids have an agreement with one of the private hospital networks, whether it is Netcare, when it is Life Hospitals, they have an agreement. And that agreement says that on that plan, they won't charge the medical aid more for your stay in hospital than what the medical aid is willing to pay. So there will never be a shortfall. Because of that, your premium will be a little bit less than what any hospital cover will be. So if you then are on a network of hospital cover, you have to go into one of the network hospitals if you have to go in for an operation. If you do not go to one of these hospitals, there will be a co-payment payable, usually a percentage of the total bill. So be very careful of that. But typically, if there is a network hospital close by to you, most of your hospitalization will happen in that network hospital. So I don't have an issue with being on an associated or on a network hospital plan. It costs you less per month and you still get the same cover because you would probably have gone to that hospital in any case. But what happens if you are in Gatsrand somewhere and you get into an accident and you now have to go to a hospital and there's no network hospital close by? A lot of people are afraid of that. So in the event of an emergency, they will take you to the closest private hospital they can find. Whether it is a network hospital or not, they don't mind. They take you to the closest private hospital, and once you are stabilized, they will only then move you to a network hospital. So you don't have to be afraid that in the event of an emergency, you'll end up in a public hospital, or you'll end up not being able to be admitted to hospital. That is built in. So network hospitals, I'm a very big, I really suggest to people to look at the network option because it works out much cheaper every month. Also your chronic medication, most of the medical aids from your pooled risk, they will pay your chronic medication, and there you also have choices whether you want your chronic medication paid at any pharmacy, at specific network pharmacies, or at a public institution like a clinic. Now again, if you choose any, your premium will be higher than if you choose network, which will then be higher than if you choose public. So if you have no chronic medication, don't choose any provider for chronic. Why do you want to pay 400-500 Rand a month more for something that you're not going to use in the first place? So if you then have to, let's say you have chronic medication, but your chronic medication is only 100 Rand a month because it's a little blood pressure medication or something, then it's also pointless to go to any chronic provider that's going to cost you 400 Rand per month, but your chronic medication only costs you 100 Rand a month. Then I'd rather pay for that chronic out of my own pocket. So think of these kind of things, because again, medical aid is what we call what-if money. It is money that you pay a third party for in case something happens. Doesn't create a cash value, doesn't come back to you unless one of those things happen. So you want to pay for what you actually need. Don't just get a broker that sits with you and wants to sell you the comprehensive plan by scaring you and making sure you have to have the best possible medical aid. There are things at different periods of your life that are more important. So if you are young, you probably don't need chronic as much as somebody in their 40s and 50s. And every year at around December, you will be able to upgrade or downgrade your plan accordingly. So if you get into August of the year, you get prescribed chronic medication, and for 2 or 3 months you have to pay it out of your pocket and then go up a plan from January, you can do that and they cannot decline you. They have to allow you to upgrade. Okay, the next portion of the medical aid is what they call the primary health care benefit. So this is the basics that all medical aid, according to legislation, have to offer their clients. And that's also as part of the pooled risk benefit. So your primary health care benefits will be paid out of pooled risk as well. So included in your premium, and again, because they have to offer this to all clients, that also pushes up the premiums because they have to calculate that into their pooled risk premiums. But primary healthcare are the basics. For example, they have to give you at least a dental checkup once a year, a GP checkup once a year. So when we talk about dental checkup, it is not doing fillings or any of that. It's just literally having an appointment with the dentist to have checked that you don't have any fillings. So make use of that. I see a lot of people, they haven't gone to the dentist for freaking years because they feel they don't have any cavities, they don't have any pain, therefore it's not necessary, and they don't want to spend their savings or their day-to-day expense on that. But you have a free session, a checkup with the dentist once a year. They have to offer you a free eye test I think it's every 3 years or so. And then they're specific for males and females, where males over a certain age can go for a prostate exam as part of their primary healthcare benefit. Also included in the primary healthcare benefit are things like antiretroviral medications. I think the COVID vaccine has now been included into that primary healthcare benefit as well. So if you get your COVID vaccine, even though you tell them you have a medical aid, it is then paid from that primary healthcare benefit of yours. It won't come off your day-to-day benefits. So that is the bottom part of your medical aid, that it's just the primary healthcare. So even if you only have the hospitalization portion, you will still have that primary healthcare as well. Then the next level is the day-to-day medical expenses cover. So the day-to-day medical expenses is going to the doctor for a consultation, going to the dentist to get fillings done, going to the optometrist. All of those kind of things are paid from your day-to-day. So there is 3 options that you have in the medical aid market on how do you cover your day-to-day. The first one is the traditional option. That's how medical aids worked when I was a child. The traditional option is everything around the traditional option is part of the pooled risk. So you pay one premium and all your day-to-day is covered through that with sub-limits. So with the traditional option, you will be able to go to the GP, get unlimited medication up to a limit of whatever, 50,000 Rand for the month, for the year. So those sub-limits are there, but there's no specific savings pool that gets depleted throughout the year. You can keep going as long as you stay within those sub-limits. At the moment, the traditional options are so expensive that very, very few people actually use the traditional option. You're talking about some of the traditional plans works out to over 10 to 15,000 Rand per person. So it is just absolutely ridiculous. So very, very few people are still on these traditional options. But if you really want to, you can. I wouldn't suggest that. The second portion of day-to-day cover is what they call capitated funds. So a capitated fund is also a type of a pooled risk way of looking at your day-to-day expenses. And how a capitated fund works is they link you to a network of GPs and a network of optometrists and dentists. So there's these dentists GPs, etc., on a list that is a network of them that have an agreement with the medical aid. You can then, through that capitated fund, go to the GP as many times as possible, or not as possible, as many times as you need to. And if you go over a certain amount, let's say 10 visits a year, you then have a small co-payment like 25 Rand that you pay extra if you go and see the GP more than 10 times. So all your GP's visits are included, all your dentist visits are included, with basic dentistry included as well, fillings, all of that as part of your capitated. But you have to visit one of the network GPs, one of the network dentists. Basic blood tests are included in that as well. So typically the capitated fund sounds fantastic, but for people that really, like people with children, it doesn't always work that well, because when the doctor prescribes medicine, they have to prescribe medicine from a specific formulary. So if they don't prescribe the medicine from that formulary, you will have to pay out of your own pocket. So what I've seen happen so often is that the doctor doesn't even have the formulary with him. So he just prescribes what he thinks and what he's used to prescribing for specific conditions. And then you get to the pharmacy and they say, well, this is not on the formulary, so you have to pay out of pocket. And then people get very annoyed. The same with blood tests. There's specific codes, and the people at the labs don't always use the right codes, and that creates an admin nightmare. So in theory, capitated funds sounds very good, but in practice, it doesn't always work as well as you think. Where capitated funds do come in, and again, medical aids are required by the government. This is something that a few years after the new legislation came in, the government brought in, is they have to have plans that cater for low-income individuals. So those plans are linked to the individual's income. So, and all of these low-income medical aid plans, so this is specifically for people like pensioners that don't have a high income, young people that aren't earning a lot of money yet. They can go onto one of these plans and get medical aid that is much, much more affordable. But all of those plans are part of this capitated, where you will get linked to a group of doctors. So for those kind of individuals, it works quite well. So it's something that you really want to look at if you are a pensioner and you want to reduce your cost. Somebody that earns less than, say, 5,000 Rand a month might pay 800 or 700 Rand a month for a full medical aid with doctor's visits, blood tests, everything included, which is really reasonable. So for those kind of people, I think it might be something to look at. The last portion is your savings portion, and I would guess probably about 90% of medical aids day-to-day cover is done through this method. Usually how they work is a percentage of your total premium that you're paying for medical aid, anything between 10 and 25%, is contributed towards a savings pool that you create for yourself. So here it is not a pooled risk benefit. It is your money that you use. So let's say it's 25%. So if you are paying 3,000 Rand a month for your medical aid, 700 Rand a month of that will go into your savings portion. Usually at the beginning of the year, in January, the medical aid allows you 12 months of that as credit. So let's say 700 times 12, it gives us 8,400 Rand for the year that you will have available in your savings. And then all of your day-to-day expenses gets paid out of that savings plan of yours. So this is now up to you. If you spend all of that by going to the doctor 5 times in January and then going to the dentist, getting new glasses, and it's done by February, that's it. Then the rest of it is out of pocket. If you put in 700 Rand in the beginning of the year, they will give you 12 times that in credit. So what happens, and a lot of people ask me this, so what happens at the end of the year if I haven't used up all my savings? So does it just disappear? Is it use it or lose it? And how it typically works, not typically, how it works is anything that you have left in your savings at the end of the year will be transferred to the new year. So let's say you have savings of 15,000 Rand for the year, you only use 10. Next year you'll have 5,000 Rand and then the credit for the 12 times the premiums that you're paying. So it's not like you don't use it. So you don't have to rush to the doctor in December to spend your savings if you still have some left over. Again, people need to understand that it is their money. So really look at it. See every month how much money you have in that savings account and try and make sure that you have money left over, because you want to start creating security for the next year. I see so many people, they just randomly go to the doctor for whatever because they think the medical aid pays. It's not the medical aid, it's your own money that you are spending. So whether you spend it on your credit card or you spend it through your medical aid, it's still only your money. So look at that as any other expense that you are running. Another thing that happens, some medical aid, some plans have what they call the threshold benefit added. It's an added benefit on some of the upper plans of medical aids, and a lot of people, especially the comprehensive plans, have threshold benefit in. Now, what is the threshold benefit? The threshold benefit over and above threshold is again a pooled risk benefit. So it becomes part of your major medical expenses. And it says that if your day-to-day expenses in any given year exceeds your threshold, they will start paying for that out of your pooled risk. And the reasoning behind it is, if something really bad happens and you have a massive lot of expenses, at least there is that cover. The problem with the threshold benefit, though, is it adds a lot of expense or a lot of premium to your monthly expense. So instead of paying 3,000 Rand a month, you might pay 4,500 Rand a month just because you have threshold benefit. And if you don't use that in that specific year, it is lost. You don't get it back. It's not part of your savings. So I am not the biggest fan of threshold benefit, because what also happens is, if you look at where your threshold is and what each person's savings is, then there's what they call a self-payment gap. So how that works is there will be a threshold for each member of the family, and that combined becomes your threshold benefit. So it is not calculated individually. So let's say adult dependents, the threshold is 10,000 Rand. Child dependents, the threshold is 5,000 Rand. And it's a family, husband, wife, and 2 children. The threshold for the medical aid will then be 10 is 20 plus 10 is 30,000 Rand. The savings will probably only be 16 or 17 or 18,000 Rand. That means once you reach the limit of your savings, you still have 12,000 Rand that you have to pay out of pocket, which is called your self-payment gap, before you can move into threshold. And that you're going to pay. And sometimes you go over your limit, which most people have. They then start paying out of their pocket. They're paying for threshold, but they never quite reach threshold, so they don't get that benefit. But they've been paying 1,000 Rand a month extra for it. So I'm not the biggest fan of the threshold benefit. Another thing that a lot of people don't know is, once you have threshold on your medical aid and you have exhausted your savings on your savings portion, you still have to submit those claims to the medical aid. You still have to submit the invoices so that they can allocate that to move you up towards your threshold. So I see a lot of people, they run out of their savings, and then when they go and they pay cash, they don't submit those invoices to the medical aid, and they just never reach their threshold benefit. So really have a look at that and make sure that if you do have threshold, firstly, it is something that has a high probability of benefiting you, and secondly, if you do run out of your savings, that you keep submitting those invoices to the medical aid to reach threshold. My personal capacity, I'd rather not have threshold, take that extra money, put it in a separate account, a separate savings account, or even a credit card account, and build up another reserve account, so that if my savings is depleted, then I have this as a backup to my savings, that credit card or a savings account or a transmission account, and that becomes my backup. So let's say once every 3 years I might have gone into my threshold. I've taken 3 years of premiums of threshold and put it into a savings account that has access, that I have access to for that extra medical expenses. So guys, if you start planning your medical, it is important to not just look at it as, oh, get the most comprehensive medical plan and pay. Really look at it and see what it is that you need, that your specific circumstances need, and create a plan around that. Because medical cover and making sure that your medical expenses is covered is more than just medical aid. Last one, gap cover. So gap cover is something that is, over the last 10 years or so, maybe a little bit less than 10 years, has become more and more prevalent as part of your medical expense planning. What gap cover does is it sits on top of your medical aid, and it covers the gaps between what your medical aid will pay for in-hospital expenses and what the actual cost of that in-hospital expenses is, as I've explained, specifically for surgeons, specifically for anesthetists, those kind of expenses. So what the gap cover does, it takes whatever your medical aid pays and upgrades that to either 300% of medical aid rates or 500% of medical aid rates. I see you now get some that go 700% of medical aid rates. So really, this is something that I feel has become so important that it is almost indispensable. You have to have this as part of your medical aid cover. One thing that you need to realize is that whether you have 100% of medical aid rates on your major medical expenses, or 200%, the gap cover will increase it to 500% in any case. So it might not be necessary to have 200%. You can downgrade your medical aid end of the year to something that only covers you for 100%. Take that money, get gap cover, and then for the same premium, you are covered up to 500%. So really look at that. Talk to your advisor. If you need some advice on this, you are welcome to contact our offices. It's 087-809-0603. We are a financial services provider. We have people that can help you really structure your medical aid optimally and save some money on your medical aid.
Financially raw, real, authentic wisdom with Lawrence Oberholzer from Retire Rich and Happy.
Hi guys, Lawrence here. Thanks for watching this video. I hope you found it informative and you got some benefit out of it. Please add in the comments any questions you might have or any other topics that you would like me to talk about. Please subscribe to our channel, hit the bell button so that you can get notified of any new videos that we post so you don't miss anything. Thanks guys. See you around.